What's going on, everybody? TG here, back with another video. We got breaking news. The Senate, about an hour ago, has just passed a $1.9 trillion stimulus plan. We're going to go into how this is going to affect the market, both positive and negative, and what you guys can expect if you're going to be eligible for any of this money that is going out into our economy, and what it's going to entail happens these next couple weeks and months in the market, because there are definitely some positives and there are definitely some negatives with passing this bill. The vote happened 50 to 49, 50 in favor of the Democrats, 49 for the Republicans. Vice President Kamala Harris is not needed to split because one of the Republicans had to go home, so was not present in the final vote. Although, regardless, even if he was there, I think that Kamala would have split the vote, obviously, in favor of the Democrats because she is Democratic. And that's how we talked about in one of our last videos a couple months ago about why the Senate race was so important. You know, it decides who has the majority in the Senate. And the Senate, obviously, is in favor or in power of passing big legislation and bills. So big stuff on the horizon. And we're going to go into all of that right now and how it's going to affect your money in the market. So before we start, like, subscribe, and just enjoy this video. So as we can see, the Senate has passed that $1.9 trillion COVID relief bill, which includes those $1,400 stimulus checks for people making under a certain amount every year. We're going to go into that and who qualifies for that pretty soon. But what I wanted to talk about first is the pros of this stimulus bill, because there are pros. As many people believe that, it's unnecessary or, not needed, there are a lot of pros. First being liquidity. As we know, liquidity in a market is essential. You need money pouring into the economy. You need people spending. You need people putting that money into things like their retirement accounts, things like their individual Roth IRA accounts, stuff that is going to be put right back into the market. And while the majority of this money is not going to be put into the stock market per se, there is going to be money getting poured into that. Many reports, like CNBC was talking about this as well, a lot of this money for people who don't necessarily need it right now. And a lot of people don't necessarily need this money right now because savings, if you look at the savings chart right here, savings is at a very, very high mark, much higher than it has ever been previously. So that money, they can be used for many different things. A lot of people are going to be putting that money and investing into the market, especially after a big downturn like we've had. Another thing is, like I said, people getting this money who don't necessarily need it for essentials like living, they're going to be using that money for goods and services. Companies like Apple, Amazon, those companies are going to thrive because of that. People want to buy stuff with that money. Where are they going to buy it on? They're going to buy Amazon. Oh, maybe it's a good time to get this new iPhone 12, maybe it's some AirPods, different stuff like that. They're going to use on that. Another big thing is the jobless benefits, okay? People who are on unemployment, instead of only getting whatever their state provides. So in my case, in New York, they provide about $182 a week is the minimum. You can get up to like 500 something for that. At the top, that is the base. But this $300 a week goes for people nationwide. So if you're only qualifying for $100 a week, you're going to get $400 because you're getting whatever you get plus that extra money. So a lot of people that are unemployed right now, maybe looking for ways of making money as well, are going to be putting some of that money, into the market and into the economy as well. Stuff like a child allowance up to $3,600 for 1 year. More money being poured into individual families that they can then use to provide for their children or their families. More state aid, obviously, expanding upon the Affordable Care Act subsidies, and obviously vaccine distributions. For those asking, hey, TG, am I eligible for this $1,400 stimulus check? Well, let me ask you a couple questions. First off, are you paying taxes? If that answer is no, you're not eligible. If that answer is yes, you are eligible, but how much did you make last year? Did you make over $75,000? If so, no. If you made less, yes. And it's a phase-out process. You can type your income into a calculator and find out exactly how much you are getting. But essentially, if you're an individual, if you're making less than $75,000, you're going to be getting something. If you're married, if you're making less than $150,000, you're going to be getting something as well. So put it into the calculator. There's all different calculators online. You can find out exactly how much you will be getting. But essentially, if you're making less than that, you should be good. So while we address some of the pros of this $1.9 trillion COVID relief bill, we also have to talk about some of the negatives. One of the biggest ones being inflation. Obviously, if we are bringing a lot and printing a lot more money into circulation, the money outstanding becomes worth less and less. It's simple economics, but it also is very relevant and prevalent to what is going on right now. More money is being pumped into the market, thus inflation is rising. If we noticed, obviously, when COVID initially happened, inflation was down about 0.1%. Now we're rolling up and interest rates are rising to about 1.4% in January. But as of right now, it has gone up to about 1.7% for these interest rates. And another reason these interest rates are a big worry to the market is future earnings. Okay, when we talk about companies, especially growth stocks that are reliant on earnings per share or even worse, sales, it makes it a lot harder for these companies to be profitable and to be seen with high PE value multiples when inflation is increasing and the 10-year treasury is increasing as well. So when you got a company that's based on future sales, it's a little bit alarming for these companies because when interest rates are super low, you can take these risks and invest in them. But when interest rates are increasing and inflation's increasing, these multiples become out of hand and just are unjustifiable. And that's why we've seen a lot of the SPACs get hit hard. We've seen companies with high PE ratios get absolutely hammered. We look at something like Tesla, and Tesla is down, I believe, almost 30% from its highs. Yeah, almost 33% from its highs. So that's obviously a big, huge drop off. But its PE ratio is still 93 or 938. But the entire market obviously took a hit when interest rates go up. If we look at, the Nasdaq dropping about 5%, being down about 8.5% at its worst on Friday, but recovering at the end of the day, still finishing the week off about 5%, being down over 10% from its highs, but has recovered since then. So the correction for some may have happened, but I want to go into what this treasury yield entails to the market, because if this thing might go up on Monday with this stimulus passed, thus being that double-edged sword that I was talking about. So yes, we are getting a lot of stimulus and we're getting a lot of liquidity into the market, but it's also coming at a cost, and that cost is this interest rate increasing. And historically, when interest rates increase, the market takes a hit, especially in the growth stocks. We've seen the Dow stocks do really, really well. Financials, banks, all those stuff, they do really, really well when that happens, when interest rates increase, the reopening trade. But these growth stocks took a massive hit. So while the stimulus, I think, is going to outweigh the negatives, there definitely are some negatives, especially long-term down the road. But I think some of the companies that are best poised for this are, the big tech stocks that are like Amazon, Apple, Facebook, companies that are based on earnings, not based on sales. And I think that's a big, big, important driving factor of this. So definitely something to look out for, definitely something to watch. But I mean, we do have a lot of money coming into the market, money coming into the economy that can be spent on a lot of these companies that get that money. Also, another company I think that's going to do really, really well for this is Walmart. Walmart obviously has taken a bit of a hit, but is starting to recover. It's down a lot, but I think this stock is poised to do very, very well. It's down about 15% from its highs. But you're going to see a lot of money being poured not into Walmart stock, but into Walmart stores. People have extra money to spend. They're going to buy food. They're going to buy the essentials. I mean, Walmart has it all. So I expect a lot of money going into retailers like Walmart, Amazon, Costco. A lot of companies and stores like that. So I do think this is good for the market. I think we do go higher. I think Monday's a big leg up after a rough month that we've been having. But like I said, I do think we go higher. We're down about over 7.5% for the month. But I think good things are in store. But I would definitely, instead of really going on a index approach, I'd take individual stocks. You guys know me, I really like Apple as well. I think Apple is going to benefit a lot from this. But I definitely think that this is a good opportunity. We had a dip, a huge dip. Apple was in the 117s. Obviously, recovered about 3% from the lows on Friday. But I mean, this thing has just been getting butchered, sitting at about over $145, down over 16%. So obviously they've had a correction, but I think the worst is out. I think the treasury yield maybe goes up to 1.8, but it's not something that we're not prepared for. I think we're prepared for this in the market. And I think that, if you are getting extra money that you don't need for essentials, I definitely think you should be putting this into the market, especially in stocks that have been taking big hits and are poised well to do well, even with inflation. Because obviously inflation will probably happen. Janet Yellen doesn't believe that it's going to be a big issue, but some people do. And I think that while it might not be, and there's no real way of telling, I definitely think you should prepare for it and put your money into companies that are poised to do well regardless if we have inflation, regardless if interest rates increase. And I think companies like that are Apple, Amazon, Facebook, really solid companies with, big earnings to back them up. So definitely watch out for these companies because I think they definitely go higher on Monday. House is setting to vote for this on Tuesday. I think it'll pass, no worries, because as we obviously know, the House is majority Democrat, and I don't see them, going against what the Senate has gone through. And then obviously it goes on Biden's desk, and Biden will surely sign that into place. So expect everything to happen sometime this week, probably about the end of the week. I think Tuesday, the House votes and passes it. It goes to Biden on Wednesday or Thursday, and he passes it. And we have a pop on Monday, and then we have a pop after Biden signs it into place, and this money starts getting poured out into the economy. So definitely going to be some volatility in the market. I'm expecting VIX to move a lot as well. But man, that thing definitely shot up. That thing was up to 29 and then just lost a ton of steam. Not really sure why, to be honest. I think people were they saw the bottom and they're like, this is ridiculous. They've seen a lot of decline, and it's a good buying opportunity. I mean, you see stocks down 15, 20% from highs, quality companies with quality earnings. I think it's a good buying opportunity. I unfortunately did not have a lot of money to put into it. I put in as much as I could, but I'm also not really trading for the next couple of days. I'm going more long term, but it hurt me to see companies down so much and I couldn't take advantage of them. So, we'll see what happens, but overall, I think this is a good thing for the economy. Maybe a little bit too much spending, but beggars can't be choosy. So we take what we can get, and we do what we can in the market. And I think that you buy some tech stocks. Don't go short term on options because we don't know what's going to happen, especially with this volatility. You don't want to get IV crushed. One bad day on a 1 or 2 week out option, you're screwed. So think more longer term, hold some equity or hold long term options, and I think you'll be pretty good. My strategy obviously is long term put credit spreads on PLTR, Nvidia, Facebook, BABA, Amazon, and Apple, and even some leap calls on Apple as well. So we'll see what happens, but I'm pretty positive. We've obviously had a rough month, but I think we recover from here and go right back to where we were. So anyways, guys, hope you enjoyed this video. Hope this video helped out a little bit. But yeah, just have a wonderful day, and I will talk to you guys next video. Bye.